Welcome back. I am Pratap here. Today is 4th January 2024. In today's analysis discussion, let us understand the importance of a trailing stop loss. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action course. You please visit our NeoStock YouTube channel. There you click on the home page and scroll down to the playlist Supply Demand Zone Price Action Course. And please click on this link. You will be able to access all the training videos starting from lesson 1.1 until the most recent lesson. Even all the upcoming lessons also will be placed under this playlist. So please make use of this opportunity. I am also providing the link to this playlist in this YouTube video description. So please go to this video description and click the link and access all these videos. And even all these video links also available at our Telegram channel. The link to our NeoStock Telegram channel is also available in this YouTube video description. So please make use of this opportunity and strengthen your analysis skills. Now let us analyze the high liquidity zones generated in our yesterday's report. We have identified 4 high liquidity zones. The first one is the BRITANNIA. It is a 75 minutes high liquidity demand zone. So we have a drop base rally. We have 4 base candles. And here this 75 minutes zone, demand zone, we fine tune to 15 minutes time frame. So let's go to the 15 minutes time frame. In this 15 minutes time frame, we have identified a rally, 2 base candles, and again a rally candle. And this 15 minutes zone is again fine tuned to 5 minutes. Let us go to the 5 minutes time frame. So in this 5 minutes time frame, we have identified a rally, 6 base candles, and again a rally. And moreover, this 5 minute zone is also a high liquidity zone. This 5 minute zone itself is a high liquidity zone and which supports multiple tests. See, previously already it is tested 2 times and later again it is tested, and even again today it is tested twice. It has given 2 opportunities. And this is the first test today at 9:55 minutes candle, 5 minutes candle, and then reached the target at 11 o'clock candle. And this is the way Britannia has given 5,890 rupees profit, which is 3.1% return on the investment. And again at 11:30 candle, once again it reached the zone and reached the target. And if you would have booked your profit in this zone, again you would have got another 5,890 rupees profit. But here, this zone is already tested. Second time the supply zone is tested, and this is not a high liquidity supply zone. Definitely there is a higher chances of breaking this supply zone. That way you will get more profit. Excuse me. That way you will get more profit if you wait. But see the second time. Here you need to take an intelligent decision, a proper decision. Shall we book the profit or shall we wait? If we wait for more profit, generally it could be a greediness. Greediness doesn't work always. So that is the reason why, because you already got first profit for your first entry, and this is going to be the profit for second entry, take an intelligent decision. Shall we book the profit or shall we use some other methodology? Let us use trailing stop loss. See here, there is a newly created 5 minutes demand zone. You can use the trailing stop loss by using 5 minutes demand zone. So what is a trailing stop loss? You keep on updating your stop loss based on certain rules. Here we are following the rules as per demand and supply zone. So what is the rule, trailing stop loss rule as per our demand and supply zone? Here what is the goal? The goal is not taking the entry. The goal is for profit booking. Okay. Instead of booking this profit in this zone, where you want to book? The next available supply zone. What is the next available supply zone? Next 15 minutes. I have marked multiple 15-minute supply zones available in this chart. This is the first 15-minute supply zone. This is the second 15 minutes. This is the third 15 minutes. This is the fourth 15 minutes. This is the fifth 15 minutes. Or further you can extend. Okay. So this is a target 1, this is target 2, this is target 3, this is target 4 and this is target 5. So totally 5 targets. Further also you can further extend. 6th target, 7th target by further going up. Okay, time being, let us limit ourselves to these 5 targets. Okay, when should we go for the second target? If the first target is violated, then you can go for the second target. Okay, how we are fixing these targets? Based on the trailing stop loss. Okay, which time frame you have to use? 5 minutes time frame. Because if the 5 minutes demand zone is violated, you want to exit by booking your profit. Okay. And this 5 minutes demand zone is near to this first target. That means even if this is violated, we won't lose much profit. Our profit margin will be reduced, but it is not much. It is not really much. And the second thing is already we got profit in our first trade. That way, even something wrong happens to the second trade, still we will be in profit only. We never get loss. So with that confidence, what you can do? Draw the demand zone. This is the 5 minutes demand zone I am drawing. So what is the goal? If this 5 minutes demand zone is violated, immediately you exit from your trade. That means you will get your profit margin from here to here. Let me draw info line. Now this is only going to be your new profit. This is 19.65. What is your actual profit? It's supposed to be this one. You would have got 29.65 rupees per one share, you would have got your profit. Instead of 29.65, your profit margin is reduced to 19.65. So say close to 20 rupees profit. That means almost 9 rupees or close to 10 rupees profit you would have been lost. If this demand zone is violated. Why you are taking this risk? Because already we got profit for first trade, and the second trade there is nothing wrong in taking risk and expecting more profit. If there is a possibility. If there is no possibility, at the time when this demand zone, 5 minutes demand zone is violated, immediately you will exit from your trade. This is what your goal. This is how trailing stop loss will be telling. If this demand zone, 5 minutes demand zone would have been far away from the supply zone, definitely I would have gone for my second profit booking at the supply zone. This 15 minutes, this 5 minutes demand zone and 15 minutes supply zone, they are very close. Now I want to take a decision. What is the decision? Instead of booking my profit in this 15 minutes demand zone, I want to go for a trailing stop loss. That is the way we have taken a decision. Okay. Is this demand zone is violated? No. It is not violated. Okay. Next. Again, any new demand zone, 5 minutes demand zone is created? Yes. Let us assume this is a ERC candle and 3 base candles. Let us draw a new 5 minutes zone again. Now I am drawing my new 5 minutes zone. If now this 5 minutes demand zone you can delete. Now see how my profit margin is increasing now. Now I will be getting 35 rupees 15 paisa if this demand zone is violated because of trailing stop loss. Okay, now prices are moving up. Again a new demand zone is created, new 5 minutes. So this is my next 5 minutes if this zone is violated. If this 5 minutes demand zone is violated, I want to book my profit. See now how your profit margin is increased now. Now you would have got approximately 65 rupees 75 paise per one share. But is this 5 minutes demand zone is violated? No, it is not violated. So again prices are moving further up and any new zone is created? Yes, a new zone is created here. Let us draw your demand zone, a new demand zone. So what is going to be our new profit now? Now this is going to be your new profit. It could have been around 106 rupees or a little higher or less, somewhere around 106 rupees. See, instead of 19 rupees, instead of 20 rupees, now your profit margin is increased to over 100 rupees because you used a trailing stop loss. Okay, now a new demand zone. Now this demand zone is violated. Now this is the point you will exit from your trade, your short trade, the moment this 5 minutes demand zone is violated. Because it is violated, now there are chances that further prices will be moving down towards the demand zone. That means if you don't book your profit margin will be reduced. Maybe again this demand zone is violated, prices further moved up. That is a different story. But according to the trailing stop loss, the moment your demand zone is violated, once a demand zone is violated, it is an indication that there is a strong supply. If the supply is further strong, again what happens? The prices will further go down. That means your profit margin will go down further. So that is the reason why here you need to book your profit. See now here what happened? Nearly 5 times, more than 5 times your profit is increased. This is the way for our second trade. In Britannia, you got 21,080 rupees profit. Already we got first trade 5,890 rupees profit we got. Second trade we got 21,080 rupees profit we got, which is 11.11% return on the investment as per one futures lot. So both the trades together you got around close to 27,000 rupees profit you got, close to 27,000 rupees. So this is an excellent trade on Britannia today. Why we used this trailing stop loss? Because already you got profit, and second time when you want to book your profit near to your 15 minute supply zone, you identified a 5 minutes demand zone. That's why you want to take a decision in case if the demand is strong, prices will go up. If the supply is strong, this 5 minutes demand zone will be violated. At the time we want to exit from your trade. Maybe instead of getting 5,890 rupees profit, maybe you would have got maybe 4,600 or 700 rupees profit. But still it is okay because already in your first trade you got 5,890 rupees. Maybe another 4,000. Together you would have got close to 9,000 rupees profit or 9,890. Say close to 10,000 rupees profit you would have got by using both the trades. In case if this is not violated, your profit margin will be further increased. That is the way we thought, and then we used the concept trailing stop loss. So this demand zone is not violated and the next demand zone is created. What happened? By deleting this, you changed your target. Again this demand zone is not violated. Again another new demand zone is created. What you did? You deleted this demand zone and again you changed your target. Again after that what happened? This demand zone is not violated and after that one more new demand zone is created. That's why what you did? You deleted this demand zone and then again you revised your target. Now next time what happened? This demand zone is violated. At the time of zone violation, you exited from your trade. That way you got a profit margin. Instead of getting 20 rupees profit for one share, now you got around 106 rupees profit you got. That is the way for the second trade you got 21,080 rupees profit, which is 11.11% return on the investment as per one futures lot. See, this is how trailing stop loss helped you increase your profit margin. But when you have to use trailing stop loss, that you have to understand properly. You cannot apply this concept just like that every time. Here we got the situation is in our favor. Why situation is in our favor? Already we got one successful trade. That way we got a profit for this for today's trading point of view. We got enough profit. And the second opportunity you got at the time, you identified a new 5 minutes demand zone near to this 15 minutes supply zone. Even something against happened to you, whatever the profit margin will be reduced, that is only minimal. It's not very great. Instead of booking your profit in the supply zone, you will be booking your profit in this demand zone. So that way how much margin you might have been, how much profit margin you would have been lost, maybe something like this. This is your loss. Profit margin, it's not the loss, profit margin would have been reduced. 9 rupees 60 paisa profit you would have been reduced. Instead of close to 30 rupees profit, you would have got close to 20 rupees profit you got. That is the only disadvantage you have if things are against you. But by taking that risk, see how much profit you got today. Huge profit margin you got. So that's why trailing stop loss is a very powerful concept, but the only thing is, when you should really use, that should be very, very important. Remember, I'm already telling you the trick. The trick is, if your newly created demand zone is very near to your target supply zone, at the time you take such kind of risks. Just imagine the same demand zone is there very near to this entry point. Can you go for a trailing stop loss concept? No, you cannot go. If prices reversed and went against, how much profit you would have got? Hardly you would have got 5 rupees or 4 rupees profit. And whatever profit you would have got, that would have been not enough for paying your your broker's commissions or your security service taxes. That money is not really enough. You would have got loss. But why we took the decision? This 5 minutes demand zone is very close to our target zone. And moreover, this is a second trade, not the first trade. This is the second trade. There is nothing wrong in losing some money if things are moving against you. Already you got a good profit in the first trade. Second trade, some profit will be reduced. Still you would have got a very good profit. 20 rupees profit you would have got instead of 30 rupees profit. So by thinking like that, we changed our plan. See how much profit, 21,080 rupees profit for the second trade. That too during the intraday. 11.11% ROI for the second trade is not a small profit margin during the intraday. Hope you understand the importance of trailing stop loss. It's a very powerful concept. But remember, when you have to use this concept, you should get good experience. You should not apply this concept just like that for every trade. You have to apply this concept in an intelligent way. Remember the techniques I told you, whatever I explained. The simple technique is your trailing stop loss, whatever the new demand zone you are creating, that should be very close to the target zone. In such kind of situations, you apply this concept. So this is about Britannia, and the next one is Bank of Baroda. This is also a 75-minute zone, but it is a supply zone. This zone is violated. The reason is it is already a tested zone. See, previously it is tested once in this fine-tuned 5 minutes area. 15 minutes area. See here, this is the zone. This zone is already tested. This 15-minute zone is already tested, and today it is easily violated. So that's why we didn't plan any trade in this zone. And there is no further fresh 75-minute zone to plan your trade. So simply we left this stock. So that means we know that this is going to be a violated, this zone. And moreover, this zone is not a high liquidity zone. This 15-minute zone, whatever we fine-tuned, that is not a high liquidity zone. If that 15-minute zone or 5-minute zone would have been a high liquidity zone, we would have taken a second trade today. That is a normal zone. But you will see next stock or maybe one more stock I will be showing you a high liquidity 5 minutes or 15-minute zone. How we got success in our trade today. So that's why this is not a planned trade for Bank of Baroda. Next one is Deepak Nitrate. So again a bull trap. Previously we discussed, a few days back only we discussed the bull traps. I clearly told you, if your fine-tuned zone is near the distal line, that is a stop loss line. Distal line is a stop loss line. If your zone is near the distal line, definitely there will be a bull trap. That is what I told you earlier. And this is a classic example. Deepak Nitrate, this is a 75-minute zone. We have a rally candle, 2 base candles and a drop candle. And in this zone, this is a fresh zone. So inside we identified a fresh 15 minutes zone. Inside this 15-minute zone, again we identified a 5-minute zone. And this zone is violated today. And a little above that, a little above this 75-minute zone, there is a 15-minute zone. Let me show you 15 minutes. Because this is a 2022 June, this zone is there. We have a drop, 2 base candles, and again a drop candle. So at the hidden body. So it is a hidden zone. This zone is a hidden zone. People who doesn't have idea about the hidden zone concept, simply they would have ignored this. But institutions are using this hidden zone as a bull trap. Bull trap for our 75 minutes high liquidity zone. This 15-minute zone is above the 75-minute zone. 75 minutes high liquidity zone. And previously I told you, if there is any fine-tuned 5-minute zone or 15-minute zone near the proximal line, near the distal line of our zone, just above that zone, because this is a supply zone, just above that zone, you will be able to find some trap. Just above that. See, this is the 15-minute zone acted as a trap. Moreover, institutions cleverly created this zone. They created this zone as a hidden zone. Normal people does not recognize this zone. Normal means people who doesn't have knowledge about these hidden zones. They do not identify this as a zone. But institutions cleverly used it. See here, a lot of order flow is there. Previously also, see the rejections from this zone. This is one rejection, this is second rejection. Actually, they are using this as a hidden high liquidity zone. I can say this is a 15 minutes high liquidity zone. Why 15 minutes high liquidity zone? Not only it has giving multiple tests, even later also, even today also we have seen order flow from this zone. Let me show you. See, previously also again, this is the third time. Previously we have seen 2 times it is tested. This is the third time it is tested. Today, after violating our high liquidity zone, immediately tested and see how prices went down. Previously also when it is tested, see how prices went down. After that it went up, and just below that institutions created a zone, high liquidity zone, and they just set a trap just above that. Today after it is violated and hit, all the pending orders, all the stop loss orders has been consumed here. Because this is a short order, and the moment it hit the stop loss, definitely you should go for long trade to exit from this trade. Long trades means bulls. All these bulls are trapped by the institutions. That's why we are calling it as a bull trap. Recently we have seen 2 or 3 bull traps during last 15 days time period. And we also got successful trades. And even today also again we got another successful trade from the bull trap. But here there are 2 things. How you can plan the trade, previously also explained. Combine this bull trap and the supply zone. That is one option. Second option is take this as a separate trade, and if this zone is violated, take the bull trap as another trade. That is also possible, either way. But the distance between is very, very minimal. It is not really necessary to exit from this trade. But anyway, I am considering as a 2 separate trades. One is a stop loss hit and another one is the bull trap trade. So Deepak net trade, the first one when it hit the stop loss, maybe if you would have exited, in case if you would have exited, you would have got 1,440 rupees loss, which is a negative return on the investment, that is 0.96%, close to 1% loss. And the second, in case if you would have gone for the next trade, exit here and again you took. Because I didn't see any necessity to exit from here, because for taking exit from this trade and again taking a new trade, the margin is very minute, very, very minute. Very just few rupees difference. Just for this few rupees difference, there is no necessity to take exit from this zone and take a next zone. If there is a considerable gap, you would have exited and again you would have taken a new trade. I haven't seen any necessity to exit and again take another trade. You would have combined both these zones together. And this would have been your stop loss. That way you would have planned your trade. In case if anybody would have exited and took a second trade, then they would have got 1,440 rupees loss. And again, as per the second trade, I am considering what is the profit. You would have taken another trade here at this bull trap, because you know this concept. You know how to make use of the bull traps or bait traps. Immediately you would have taken another trade. That way you would have got a profit of 9,690 rupees profit, which is 6.49% profit. But here, how to book the profit? Today prices did not reach our target area. This is our 15 minutes demand zone. Prices didn't reach up to this target. So for that, what is the chance? What is that you have to do? From where the rejections are coming, there you draw a line. I have already drawn this horizontal line. Around 2 o'clock, between 2 o'clock and 2:30, definitely you need to exit from your intraday trade. At least 1 hour before trading session, if you book your profit, that would have been a good choice. So that's why we are saying from where here prices are not letting this area, probably there is some pending orders are here, somewhere here. Maybe at 1 minute time frame you may find something. It's not letting you go the prices down. Is there any 5-minute zone here? Maybe you can draw a zone like this. So this area is not letting. Maybe there could be a very strong order flow in this area. So anyway, I didn't draw the this 1 minute zone. Instead, we have drawn this horizontal line. The reason is there is a strong order flow we identified here. So between 2 o'clock and 2:30, you exit somewhere here. When prices are nearing to this blue color line, that way you book the profit, because it is also going to be almost the end of the day. So why we are exiting a little earlier? The reason is the trading hour will be closed in next 1 hour and prices are not reaching this 15 minutes demand zone, which is our target. So that is the reason why you have to use some other techniques and exit from your trade. So this is the way until this blue color area, the drawn where actual order flow is there. That is the target, revised target. I can say that is the revised target. The revised target is not based on the 15 minutes time frame. The revised target is the order flow in that area is not letting the prices reach up to the 15 minutes demand zone. So that is the reason why we are exiting before it reaches our actual 15 minutes target. So that is the way Deepak Nitrate has given 9,690 rupees profit, which is 6.49% return. Previously also, once I explained you, from your entry point, our average return on the investment for our high liquidity zone, that is 6.1%. How to draw 6.1% target, how to identify, previously once I explained. Please go through that old videos, you will understand. Instead of, in case due to any reasons prices are not reaching our expected target, the minimum 6.1% one target, if it is already reached, we can exit there itself. But anyway, this is a different story. So that is the reason why around between 2 to 2:30, somewhere here you need to exit. This is about the second successful trade, Deepak Nitrate. Out of these 4 stocks, this is the third one. Fourth stock is a Pidilite. This is also a successful trade. So we have a 75-minute zone, Pidilite Industries. This zone is created in September 2022. We have a and inside this is a ERC candle, and then remaining all these 4 base candles and again drop candle. So inside we identified 2 15-minute zones. Inside this 75 minutes area. So let us go to the 15 minutes time frame. And there inside this 75 minutes, we identified 2 15-minute zones. This is the first one. So this is a ERC candle, rally candle, 3 base candles, and a drop candle. This drop candle leg out is not a very great. That's why there is a follow-through candle is also there, another ERC candle. So that way you can consider this is a valid zone. And there is one more zone. We have a rally candle, 2 base candles, and a drop candle. So this is the way we identified. And the 5 minutes time frame, we cannot fine tune. The reason is the data is not available. If the data is not available, what we have to do? Because the structure is not clear, we can ignore this zone. But this itself is a high liquidity zone. This 15 minutes is a high liquidity zone. The reason is, see how the order flow from this zone. The order flow from this area you can see. Already there is a strong order flow from here. And recently also you see how that particular zone is reacting. See how prices, see the rejection, strong rejections from this zone, strong rejections from this zone. Even today also see the strong rejection. That means a heavy order flow is there inside this area. That is the reason why even though your 5 minute zone is not having clarity, Not having clarity means the data is not available. Still we can trust this 15-minute zone because this is a high liquidity zone. That means inside 75 minutes high liquidity zone, we identified a 15 minutes high liquidity zone. That way you can take the risk and you can plan a trade. Because we already got success in other trades, that is a different story. If anybody would have directly wants to go for this trade, still it is a valid trade. Today morning candle 9:15 candle, the prices went. Let me show you the 5 minutes candles. This is today's 9:15 candle. You go to 1 minute candle, you get better clarity. 1 minute candle prices went and closed inside this zone. So definitely sometime, few seconds, the price would have been stayed inside this zone. Opened here and went there. You would have definitely got a trade here. And then from here prices came down and at 9 minutes 34 it reached the target. In just 20 minutes the trade is completed. This is the 15 minutes target. And Pidilite Industries has given 7,537 rupees profit, which is 6.12% return on the investment as per one future slot. So we got very good successful trades today. So this is about the high liquidity zones generated from our yesterday's report. Now let us generate stocks near demand and supply zones for all the time frames so that you can plan your tomorrow's trades. So let me generate demand and supply zones for all the time frames starting from yearly time frame. Entry time frame is yearly. Let us find the stocks near yearly demand zone. So no stocks are there. And yearly time frame, let us find the stocks near yearly supply zone. No stocks. Now let us change the time frame to half yearly time frame. Let us find the stocks near half yearly demand zone. No stocks. And half yearly time frame, let us find the stocks near half yearly supply zone. So one stock is identified, UPL. Let's go back. Let us change the time frame to quarterly time frame. Let us find the stocks near quarterly demand zone. No stocks are there near quarterly demand zone. Quarterly time frame, let us find the stocks near quarterly supply zone. And 3 stocks are filtered. So let's go back. Now entry time frame is, let us change the entry time frame to monthly. Let us find the stocks near monthly demand zone. So only one stock is near monthly demand zone. Let's go back. Entry time frame is monthly. Let us find the stocks near monthly supply zone. So 2 stocks are filtered. Let's go back. Let us change the time frame to weekly. And let us find the stocks near weekly demand zone. So 1 stock is filtered. Let's go back. For weekly time frame, let us find the stocks near weekly supply zone. So 6 stocks are filtered, which are near to the weekly supply zone. So let's go back. Now let us change the time frame to daily. So entry time frame is daily. Let us find the stocks near daily demand zone. So 3 stocks are filtered and there are no high liquidity demand zones, daily demand zones. So we haven't identified. So let's go back. Entry time frame is daily. Let us find the stocks near daily supply zone. We have identified 8 stocks near daily supply zone. Any high liquidity supply zones? SBI Life is a high liquidity supply zone, but it is already tested 2 times and also 2 rejections. So you need to identify a fresh 75-minute zone inside this. That way you have to plan your trade. Or a fresh 15-minute zone inside 75 minutes. And PS. So we have identified only one high liquidity supply zone. So let's go back. So now let us change the time frame to 125 minutes time frame. And let us find the stocks near 125 minutes demand zone. 8 stocks are filtered. So let's go back. Entry time frame is 125 minutes. Let us find the stocks near 125 minutes supply zone. So these 8 stocks are filtered. So let's go back. Now let us change the time frame to 75 minutes time frame. So entry time frame is 75 minutes. Let us find the stocks near 75 minutes demand zone. So 3 stocks are filtered. No high liquidity 75 minutes demand zones. We haven't identified any high liquidity zones. So let's go back. Now entry time frame is 75 minutes. Let us find the stocks near 75 minutes supply zone. So 6 stocks are filtered. Let us check the high liquidity zones. No high liquidity supply zones. So we have identified only one high liquidity zone on daily time frame, that too one supply zone. There is no high liquidity daily demand zone. There is no high liquidity 75 minutes demand zone. There is no high liquidity 75 minutes supply zones also. We have only one high liquidity daily supply zone. Mostly tomorrow you may not be getting a trade. I don't know, only that one stock, whether the trade will be executed or not. Otherwise, it is going to be your rest day tomorrow, as per high liquidity zones. Maybe you may look opportunities in other zones as per demand and supply zone theory. But we can't guarantee those trades. Okay, now let's go back. Entry time frame is 25 minutes. Let us find the stocks near 25 minutes demand zone. So 6 stocks are filtered. So let's go back. Now entry time frame is 25 minutes. Let us find the stocks near 25 minutes supply zone. 5 stocks are filtered. Let's go back. Entry time frame is 15 minutes. Let us find the stocks near 15 minutes demand zone. 4 stocks are filtered. Let's go back. Entry time frame is 15 minutes. Let us find the stocks near 15 minutes supply zone. No stocks are, 5 stocks are filtered. Let's go back. Let us change the time frame to 5 minutes. Let us find the stocks near 5 minutes demand zone. 6 stocks are filtered. Let's go back. 5 minutes time frame. Let us find the stocks near 5 minutes supply zone. So 10 stocks are filtered. So these are all the stocks near demand and supply zones for different time frames. I wish this information is useful to you. Let us all meet again in our next video tomorrow. Thank you.